So we missed the expected job number in April by a large margin. This is actually a huge positive catalyst for the markets overall, not even just the Nasdaq. Not only is it good for the high growth sector and the highly speculative stocks, right? It's good for everyone. Hear me out. This basically quiets and tampers down every single talk of raising interest rates and, removing the hand that is holding the market's hand, the helping hand being the Fed and the government. As long as jobs are not getting back to what they were pre-COVID, that is reason enough, most likely, for the Fed to keep holding our hands, keep the interest rates low, keep the stimulus potentially pumping, right? Who knows? And this is going to bode well, very, very well for the markets, because once we get that interest rate hike, who knows how low we're going to go, It's priced in a little bit, but I honestly don't think it is that much, because no one is really expecting it to happen instantly, I think. And the fact that we got this and we got one green day because of it, and then literally just a huge red candle bar today, is a little funny and doesn't really make much sense, especially when you consider these other reasons. So this was the thing, this was May 5th, this was last week. This was the thing that a lot of people thought caused the huge gap down here. And she walked her statements back. And obviously this entire thing, this definitely expedited the sell-off since the 29th here. 100% it expedited the sell-off, my friends. And then she walked them back and nothing happened, right? We just went down again. So that's out of the, and this entire thing, she was basically talking about, hey, if the economy might overheat if we don't raise interest rates. Now the economy is literally, the economy is doing bad. These 266K jobs, right? The economy from this measure is doing bad, and the stock market is doing bad since she said this. Also, there's no reason for them to raise interest rates now that, well, at least short term, right? Of course, short term, because, apparently in their view, they need to coddle the markets until we get the jobs back to good. That's their philosophy economically, right? Another reason that we are due for a bounce. I see a lot of people wondering, oh man, it's about May. Should I sell? This other person thinks May is going to be a bad month for the stock market, right? Yeah, it's been bad so far, obviously. Historically, May is the 4th best month for the market. Are you kidding me? Yeah, it's a good month. When it gets to the end of July, that is when I'll consider going more, at least 10 to, 50 to 75% in buying power. That is when you want to kind of be a little careful. Now, of course, it's just one indication. And of course, you can find a ton of different statistics to support a lot of different sides and many things. But this is one that is pretty indisputable and pretty important, I would say. Bond yields, although they've been going up substantially since the 6th here, they have actually gone down significantly since the all-time highs here of the Nasdaq. So that is another reason why the markets have just been batshit crazy. Also, looking at the economic calendar, there's nothing necessarily bullish here, but those are your 4 reasons why we may be seeing a bounce short term. And there's actually a 5th that we're going to get to. But before we get to that economic calendar, these are the events next week. I don't think we have JP in here, which is very good, right? We do not want JP to be talking. When he does, he either holds the markets up in his hand, or he will beat us to the ground and throw all of our hopes and dreams into a garbage can that is on fire. If we look at the technicals here, the number one indicator that I actually want you to look at, well, basically the RSI, which we are pretty oversold, right? We're at 40, right? Okay, now in perspective here, we're at almost all-time highs. Okay, we're pretty close to all-time highs when you zoom out a little bit, right? RSI, we're nearly oversold. We're due for a bounce. Also, we already have had this double top pattern, right? It's been bearish. We've called this out for a while. And, we're almost down to the price target. We basically found it, 13.1K. If we look at the Bollinger Bands in the daily, we're almost at that bottom band. If we look at the 4-hourly band here, we are not that close, but we're still much closer to that bottom band than the top band. And basically what this means, if you pair these indicators together, it doesn't take a genius to figure this out. There's more upside than downside at the current prices, at least for the short to mid-term, 100%. If we look at the indicators here, there's really nothing except bearish. 2-hourly, we just got the flip to bearish. On the hourly, we're bearish. There's really no signs of a reversal right now. So that is something to keep in mind, but I also want to show you some moving averages here. Not only this 200-day EMA, but also this ascending level of support, right? I want everyone to know that we are still in a bull market. We are still in the most aggressive bull market in history, as long as we are above this ascending level of support, in my view. I mean, it's factual, right? Since we've held this level, since we broke out of this and confirmed it, it's been the most aggressive bull market ever. Like we've had crazy corrections, right? This was a harsh correction. This was a harsh correction. This was a horrible correction. February 16th and March 5th, that was awful. And now we're going through another one of those right now, and we'll see how long it persists. But as long as we stay above this level, it is better to be in stonks than any other time in history if you look at a decade outlook. Current positions and portfolio showcase. We show my portfolio regardless of the carnage and the death. It's absolute death right now. It's absolute carnage. And everything's red, literally. It's absolutely horrible. And I just want to prove to you all that I am going to be transparent regardless of if we're doing good, if we're doing bad, whatever it's going to be. So those are the current positions. And here are the price targets. Relevant information in regards to the total has finished now. What do we do now, mate? You can do this. You can check the earnings live stream for BNGO, right? This is BNGO here. Nasdaq markets and high growth. That's actually this video. That was actually a reminder for me for this video. Also, Benjamin Yang and BNGO Bears on YouTube. Do y'all want to see me debunk this guy and other YouTubers? No disrespect to this guy, I don't know him, but do you want to see me debunk that guy? Also, upgrades and more ads. Should we be doing more ads to get upgrades more quickly, right? Because all of my revenue from YouTube, right? Revenue. I call it revenue, more like pocket change, right? You know what I mean? But I do not pocket any of it. Okay, it's a little funny how I worded that, but yeah, all my money from YouTube goes to upgrading. I'm gonna need a camera or a webcam, something like that. I don't know, some DSLR. I don't know what I'm gonna do. Also monitor and lighting, which I don't know how I'm gonna do that either. But yeah, I'm sure I'll figure it out. Okay, I had no idea I was gonna get this audio so good. Now it's awesome, right? So I'll figure it out. Also, so if you guys want me to see those upgrades a little bit quicker, right? Because the DSLR camera, I think that's in like a couple $1,000 range, which is going to be annoying. But if you wanted me to get that a little quicker, let me know if you would be cool or not with more ads. I'm leaning towards no, but let me know. Twitter, you can follow me at Twitter. The link is in the description. Anyways, thank y'all so much. This is not financial advice. I will see y'all in the next one.